Good morning, everyone. We call it Webinar Fridays, and we're really excited about this one. For those who don't know me, my name is Helena Natt. I'm the Executive Director with the Greater New York Chamber of Commerce, representing 30,000 different business and civic leaders. And we are always listening to the businesses, what their voices are and what their concerns are. And what their concerns are right now is access to capital. And that is the reason why we are putting on this very, very important webinar. I would be remiss without acknowledging Manly Lynn from the SBA. Manly comes on our weekly networking events that are online, and she hears the concerns of businesses. And it's very important for those who are listening right now to voice what your concerns are and what your challenges are, because this panel here, Manly Lynn representing the Small Business Administration and other people from the organization representing the Greater New York Chamber, is here to help you with those challenges and to help you grow your business. When you grow your business, that means you're going to be able to employ people. You're going to be able, we call it pay it forward, as well as grow the economy and patronize businesses, your local, I call it your local economists in your neighborhood. So that's why it's so important that we get this information back to you as an entrepreneur and as a small business owner. So I want to say thank you, everyone, to this panel that is going to provide this great information. For those who are on there right now, who are attending, everyone will receive a copy of the PowerPoint presentation. Please put your information and your questions in the chat. We will be having the panelists answer your questions and after Manly's presentation from the SBA. So again, put your information in the chat. In the last 10 minutes, we will be going over that. So Manly Lynn, thank you so much for your support with the Greater New York Chamber of Commerce, for what you do for small businesses. And you know what, for everyone that's listening, the SBA and everyone on this panel provided PPP. They provided opportunities for economic injury disaster loan. And it's really important. I have to say, if you didn't get your PPP loan forgiven, make sure that you do. There is no reason why that you should be paying that back. And we have this panel here. I'm giving it over to you, Manly Lynn. Thank you again so much.
Thank you, Helena. Let me share my PowerPoint first. Good morning, everyone. Thank you for coming to today's event. We know that many of you, you need money, funding to support your business. We hope everyone will be successful. So, and today's we have 7 lenders for different programs to talk about how you should prepare, how you should talk to them, when you should talk to them. And you will receive all the information that from the 7 lenders. So you don't have to jot down the information, okay? So SBA, you can go to sba.gov nationwide, no matter where you are, you can get information, local information, especially microloan lenders. If you are not in New York, today in my PowerPoint, I only list the New York area micro lenders. But if you're not in New York area, then you should go to the sba.gov to find the micro lenders in your area. Also, sba.gov/ny, on that website, you can find the New York area's micro lenders. The good news about SBA is last year, we finally have different kind of languages. There are more than 30 different languages. So you can read all the SBA's information, choose the language you feel be familiar with. So SBA, no matter what stage you're of your business, you can find the programs to help you to start, to grow. So we have financing program. That's what I would focus today. And then we have one-on-one counseling and also business education program. We help business to get federal government contracting. In 2022, I hope all the business can learn and build up a good relationship with the agency need your product or services. Government contracting every year spend more than $500 billion. And also we have set aside program for disabled service disabled veterans, for we don't call minority, we call socially and economically disadvantaged business, for women-owned business, and for business located in the hub zone. So please come to learn about those government contracting assistance and disaster assistance. I hope we don't need that anymore. But if there's disaster, then SBA help everybody, not just the small business. So you can go to the website. Now we have more than the color in red. Those are SBA's funded resource partner. They provide one-on-one counseling free, and also have certain like 504 loan. You can get contact to the CDC. So please go to the website. If you need one-on-one counseling or assistance, believe me, you need that. So we provide information today. You can talk to the lenders, but you need somebody help you to prepare your loan packages. So please contact our resource partner. So at least here that you can make an appointment with those business advisors to help you. So far, for the COVID-19, all the relief programs ended. But SBA is still helping a lot of other disasters right now. For those, if you got EIDL loan, now from October will be the time you have to start the repayment. So you can contact the service office if you have questions. So now I'm going to talk about SBA's financing programs. There are 5 big categories, but very important for small business. You need to know how much you want to borrow. You need to know what those monies for. How will those funds can help your business to go to the next level or help you to be successful. And most important things, you have to show you have ability to repay the debt. So how will the funds be repaid? But today the lenders, they will talk about that in detail. So I'm going to go to the loans. The first one, when you go to SBA.gov, you can find lender match. So you answer a few questions, how much money you want to borrow, how many years your business, and how many employees, how your tax return information, then you can get matched in 2 days. So you can talk to the lenders that they think you are lendable, and then you can choose the one that you think is best for you. So get ready is the most important things for you. Talk to your accountant, talk to your partner, talk to your lenders, and talk to the lenders today, okay? So SBA, we guarantee the loan. So SBA is not a lender. We work with lenders. We guarantee to the lenders. If something happens, small business cannot repay the debt, SBA will pay to the lenders up to 85%. That's how SBA work with more than 5,000 lenders nationwide to help small business. And for business, you can borrow from $500 to $5.5 million. And not everyone need SBA's guarantee loan. So if you go to your lender, your bank, they have their own programs, okay? If you're qualified for their own programs, take it, okay? But if the lenders think a little bit risky to lend you the money, they will submit your loan package to SBA to see if SBA can guarantee to them. So you don't have to contact SBA. You can just work with your lenders. Lenders, they handle all the loan transactions. Okay, so I already mentioned that we have 4 resource partners. They can help you to prepare your loan packages, especially your business plan. There are three big categories about SBA's loan program. The first one is a 7A loan. 7A loan you see here, you can use the proceeds for almost everything, even refinance your existing business debt. You can borrow up to $5 million. The interest rate is prime rate plus 2.25% to 2.75%. If you borrow less than $350,000, you don't have to pay the guarantee fee. We have express loan. You can borrow up to $500,000, and the turnaround time is only 48 hours. So, but SBA only the preferred lenders that make the express loan. We also have community advantage loan. This is the only programs extended from the COVID-19. So originally we're in September 30th this year. Now be extended to 2024. So you can borrow up to $350,000, but the lenders must be CDFI, CDC, micro lenders. Later you will hear who make this community advantage loan to you. We also simplified and also removed some restrictions for this community advantage loan. The second one is 504 loan. This is a very important loan for you if you think about to buy the property or machinery for your business. This is not a program for startups. This is for business to expand their business. So you see the pie chart, you will pay only 10% down payment, and SBA will lend you 40%, and we will find the lenders work together. The lenders will lend you 50%. So actually you borrow money from two lenders. The interest rate will be 25 years of fixed interest rate. The total amount can go up to $12 million. So I think, during the pandemic, and especially now, a lot of business and realize the rent is the biggest burden. So if you can afford the 10% down, please consider 504 loan. So there are 3 CDCs in New York area. Okay, so I list here the checklist, but this year SBA made a lot of new rules for lenders and for borrowers. So please just go to SBA's website to find the new information. So the last one I'm going to talk about the microloan, because most of the lenders, they don't make loan to startups. So SBA work with nonprofit organizations to offer the microloan that you can borrow from $500 to $50,000. That's for startups. They also provide technical assistance. So we have 6 microloan lenders in New York area. SBA also lend money to the venture capitalists. So you can find the venture capitalists on the directory here. You have to contact with them, see which one meet your need, and then you need their requirement. Surety bonds is for the construction company. For construction company, they get government contract. They need surety bonds. So SBA have these programs. We have 3 international trade loans for exporting business. But if you are not exporters, you sell your product or services to the exporter, you can use this one too. So in New York, like education, tourism, and financial business actually are 3 industry use this loan a lot. For example, like you are a CPA, then you help the exporter, you can use international trade loan. You can borrow up to $5 million. You can contact Ed here. He's the finance manager for New York and New Jersey area. So the last one is not SBA's program, but very important grants. SBA coordinate with 11 federal government. There are grants for R&D. So it's not for you to start a business or run your business. Please go to the SBI.gov. All the, every year have more than 5,000 business got this. Even the startups, even you haven't started your business yet, you can apply for this grant and start your own business. So each of the projects more than $1 million. So you can see here, we coordinate with 11 agencies, including everything. So especially, education and health, human services, they have projects need your small business help. So please find those opportunities. The technology transfer program, small businesses have to find a nonprofit research institution to work together. The last one I want to share with you, this is important. They have tutorials, 55 courses, including number 6, how to prepare your proposal. I think a lot of business need to learn about that, even you don't want to apply for the grant. So thank you so much. Now we are going to talk to the lenders and listen to the lenders. And later, if you have questions, please ask questions. I will just pull out the names by the computer, around the computer to ask questions. So first, please, the lenders, please introduce yourselves, your name, your titles, and your organization. Thank you. James?
Sure. So good morning, everybody. First of all, thank you, Manly, and thank you, Helena, for putting this together. Hopefully soon enough, it'll be in person. My name is Jimmy Vigna. I work for a company called Pursuit. Some of you may know us by our former name, the New York Business Development Corporation. We are a New York State chartered bank and community development financial institution that has been around since 1955. However, we are a transactional lender and not deposit-based, and we are licensed to administer the 7A, 504, and community advantage loan programs in New York, New Jersey, and Pennsylvania.
Thank you. Next one, Howard. And the next one will be Edmund, so you can unmute yourself in advance. Thank you. Howard?
Thank you, Manlin. Hi, everyone. My name is Howard Colon. I'm one of the business lending account executives with First Republic Bank. Pleasure to be here, and thank you all for joining. And it's also a special thank you to Helena for all of this. Thank you.
Okay, Edmund?
Hi, good morning, everyone. Very nice to meet you. Thank you, Helena. Thank you, Manly, for allowing me to speak. We'll get into more details about the products, but my name is Edmund Lay, one of the business counselors at Renaissance. Again, it's a pleasure to meet you.
Next, Lily. And then
Hi, good morning. Good morning, everyone. This is Lee from Dime Community Bank. I'm the branch manager at the Flushing locations. Thank you.
Renee, please.
Hi, good morning. Thank you, Manly. Thank you, Elena, for the invitation. So my name is Renee Cruz, Senior Business Lending Officer for BOC Capital Corp., which is the lending arm to our main organization, the Business Outreach Center Network, or BOC NET, as many of folks refer to us. We are a nonprofit organization that provides technical assistance services to small businesses, as well as access to capital. We service New York City, Westchester, Long Island, the surrounding areas as well. We've been around since the early 1990s, helping a lot of small businesses, and I'm looking forward to today's conversation.
Matthew, please.
Sure, thank you. Good morning, everyone. Matthew Foley, City National Bank. I am East Coast. I'm in charge of East Coast business development for the SBA programs within our bank. So working with the markets that we have footprint in up and down the East Coast from Miami to Boston, but my primary location is New York City. I sit at the office at Park Avenue, and that's where I've been for the last 10 years with City National. So thank you for having me.
Thank you. Michael?
Hi, everyone. Good morning. Happy Friday. Michael Halevi. I manage business banking across one of our Midtown Manhattan locations. Really pleasure to be here and hope that we can help guide each of you on your journey with respect to access to capital. Thank you, Helena. Thank you, Manly.
Okay, thank you. Now we are going to the next question.
Hold on for 1 second, Manly. I
Sure.
just want to interrupt. Someone said that the chat is disabled, is not working. So put your, I'm trying to figure that out. I've never had that before. So put your question, your questions in the Q&A. There's an opportunity for Q&A until I figure out why it's the chat is not working. So sorry about that, Manly.
Okay, thank you. For those who just show up now, actually you will receive the 2 files. One is my presentation The other one will be all the speakers today, their programs, their contact information, so you don't have to worry about those information, okay? The second question is, a lot of business, they don't know when, which banks actually will make money for them, because some of them just startups, or they haven't started, or there's a rumor say only more than 2 years, they can talk to the lenders. So what stage of the business can you make loan to? So James?
Sure. So Pursuit actually works with both startups and existing businesses, although the requirements may be a little bit different for someone that is just starting out in terms of requirements for guarantees and required equity contribution. So we do work with both startups and existing businesses.
Thank you. Howard?
Yeah, primarily the clients that I work with are businesses that have been in existence for 3 years or longer. Typically, we'll look at that to see like some of the growth trends, and then do an analysis based on that to lower rate.
Okay, Edmund?
So at Renaissance, we finance businesses at all stages, startup businesses, existing businesses, even pre-revenue. You come to us with a strong business plan. The thing is, we need to see a 50% capital injection from the owners. So let's say you're trying to open up a restaurant and the total budget is 100,000. We would expect that the owner is willing to take some type of risk, 50%, which is 50,000 in this example, and then Renaissance would try to bridge the gap.
Lily?
Yes, so at Dime Community Bank, we take a look of existing businesses and brand new build-up businesses. Most likely with the new businesses that will go into the SBA lending with acquisitions, with new ideas. We could explore based upon the business plan and 2-year projections. Existing customers, more solid, more of revenue generated, we're also looking into as a more conventional loan process.
Renee?
So at Bach Capital, similar to some of my colleagues on the panel, we help both startup businesses and operational businesses. And on a case-by-case basis, we can even look at some applications for some pre-startups. I would just say that each of those, the pre-startup, the startup, and the operational phases, let's say, they have specific requirements. There might be some requirements for startups that might not be in place for an operational business, or vice versa. So it just depends on your specific situation, but we can help all stages of business.
Matthew?
Sure. And I think that's an important question for everybody, is to understand what the lenders are interested in, what their credit appetite is. So City National, we like to work with companies that have been in business at least 1 year or filed at least 1 year of tax returns. And then we can look to projections, business plans, things of that nature. We participate within the SBA programs according to our credit appetite and what we like to do as far as how we lend. So we don't look at startups. We like to see a bit of establishment. We focus heavily on the operator and their background as well. And so lending within the 7A and 504 program, that's how we like to look at these businesses and the opportunities, understand what they're looking to do and accomplish, and make sure that the use of funds fits into what we are looking to finance.
Michael?
Yeah, hi. Just, the firm can cover companies of all sizes, pre-revenue, startup, established businesses. For my team specifically, we generally will focus on companies that have anywhere between 1 million in revenue up to sort of 20 to 25 million in revenue. But that being said, if you're smaller or you're larger, we can certainly find a good spot for you within the firm.
Okay, thank you. Now we will move to the next question. Do you you work with SBA, provide 7A loan, 504 loan, or micro loans, or community advantage loan? James?
Yep. So Pursuit provides the 7A, 504, and Community Advantage program. We do not provide the microloan program. And absent any SBA specific products, Pursuit also provides a suite of non-SBA products as well.
Howard?
Yeah, primarily being that we do look at trends 3 years and out, and I do know that the SBA does have supports even for businesses that are established, and that probably would be the maximum capacity of where we would kind of use the SBA. A lot of the way we also work with the SBA is in regards to kind of just going more conventional route and then doing a subordination in case there is some type of EIDL product in place. We can still be able to provide additional funding on top of that if there was a need, and that, you know, from a documentation standpoint and financial standpoint, it makes sense. Yeah.
Okay, Edmond?
At Renaissance, we provide microloans only. Unfortunately, no lines of credit, no 7A loans or 504, but we can lend up to $100,000.
Thank you. Lily?
So as at the Dime Community Bank, we do 7(a) loans and also the 504 loans. Whatever the SBA is offering, we pretty much matching it the offers. We don't do micro loans and community advantage.
Renee?
All right, for that, having trouble reaching the mute button. The Bach Capital, in terms of SBA products, we have two principal ones. It's the SBA micro loan. So those are loans anywhere between $500 and $50,000. And then we also are a community advantage lender, which allows us to go between that $50,000 range all the way up to $250,000. So those are the two principal ones. We don't have a traditional 7A and we don't have the 504 programs, but we do have those other two specific ones that I just mentioned.
Matthew?
Sure, City National. So we focus on 504 loans and 7A loans, with also, you know, and within the 7A program, we do provide express loans as well. So 7A, it can be utilized for a number of different purposes, and it's a flexible loan program. So we use that for business acquisitions. We use that for permanent working capital, real estate financing with tenant improvements. So it does allow a lot more flexibility. So 7A, express, and 504.
Thank you. Michael?
Yeah, so our firm will handle SBA Express, 7A and 504, generally 7A and 504 for real estate transactions. We can do loans as low as 5,000, either vis-a-vis, you know, the SBA, or certainly on our own conventional balance sheet.
Okay, thank you so much. My next question is, other than SBA's program, guarantee program, I know all of you have some, you know, other programs can help the small business. So please talk about your programs. James?
Sure. From a non-SBA standpoint, so Pursuit is able to do a number of different things, whether that be a short-term quick capital via our online lending platform through Pursuit Community Finance, whereby a business owner can access up to roughly $100,000 via the Smart Loan program within a week. Additionally, we have some very specific programs around contract financing for the city of New York. So if you have a city contract and you're looking for initial startup funds to be able to fund the front-loaded costs that you need until you get paid. And finally, with regard to the 504 loan program, when a third-party lender, meaning any of my colleagues here that provide the 504 program, which is a collaborative program, if they were unwilling to participate in the program, Pursuit is able to provide the 50% first mortgage that would have been provided by the third-party lender in lieu of them should they decline it.
Thank you. Howard?
Yes. In terms of like outside of SBA lending, where the majority of the lending that I'm able to do is kind of when the businesses are over 3 years in business, we'll look at the kind of financials, do an analysis based on the you know, the expectancy and stability of the growth. And then based on more of what we look at is guarantor strength in respect to their liquidity. The stronger the liquidity position is for the guarantors as well as the business, then we're able to be able to drive down the rate as low as prime -1 or even 1.95% for the first 6 months on, you know, some lines of credit. That's one of the programs we have, as well as just term financing out as far as 7 years and as low as 5%. So it's really more based on those kind of metrics, but we definitely have room to kind of you know, maneuver within that.
Thank you. Edmond?
At Renaissance, we have two loan programs at the moment. So the first one I touched on a little earlier. We can borrow up to 100,000. The rate is 4 to 6% fixed. It really depends on the location of your business. If it's deemed on low to moderate income, the rate would be 4%. If it's middle or high upper income, that would be 6%. So it's not dependent on the credit, on business income. So that's the small business loan program. Then recently we introduced the Express Impact Loan. So over the last few years, as we were talking to business owners, we noticed that we weren't able to help those business owners without the legal status. So we really opened up the doors to the community. We can lend up to 15,000 even without the legal status, but you just have to provide a guarantor. Yeah, you can borrow up to 15,000. The rate is slightly higher. That's capped at 8%. But it's very favorable to those who are seeking financing without the legal status.
Lily,
Yeah, so with Dime, we recently came out with the Dime Express loan, which is 100,000 or less. It's pure credit score based product, and we partner out with one of the fintech company to search for the to pull the business credit and the personal credit. So the maximum is 100,000 for existing more seasonal businesses. And then we also offer the regular commercial mortgage product without file 4 guarantee or 7A SBA guarantee. So it could be owner occupied. It could also be investment properties.
Renee,
At Bach Capital, aside from the two major SBA programs that we primarily use, we also have a very popular program, and I should actually say it's split between two because it depends on the type of contract that you may have. But we also have what's called contract-based lending here. This also encompasses if you have purchase orders that you may be working on. So our organization is able to provide bridge capital to businesses. So if you're working, for example, on a New York City agency contract, on a New York State agency contract, and even on a case-by-case basis, we can finance certain private contracts. We can help provide mobilization funds. We can even help you finance approved work via invoices that you may have or approved requisitions if you're a construction company. So that's a very specialty type program that we have. And we see that that's a very popular one right now, in addition to a lot of the microloans that we're making. So that's really what it is. There are some other programs that we have, some other guarantee programs, but they fall really in line with a lot of the requirements that our SBA programs do. And really the funding source just depends on the status of the client, if they have, let's say, an I-10 or versus a Social Security. So it's just little, minor details like that. But in terms of like principal programs, we have our micro loans, we have the SBA Community Advantage, and then we have our contract-based lending.
thank you. Matthew,
Sure. City National Bank, we have a full commercial lending platform aside from SBA. So that covers working capital lines, asset-based lending, equipment finance, debt refinance, commercial real estate purchases, or commercial real estate owner-occupied refinance. We also have somewhat limited appetite for investment property loans. It's not our main focus. City National is an entrepreneurial bank, and we like to work with the business owners specifically, help them on the personal side and the business side as well. So it's a full suite of commercial lending programs.
thank you. Michael,
Yeah, just similar to Matt, we also offer the JP Morgan Chase full suite of products. One thing I'd mention is that for loans less than $500,000, so 500,000 or less, once we have it approved and booked, that loan is out for 5 years, sort of amortization with a 5-year 5-year revolving with a 5-year amortization. So effectively, you're getting 10-year money. We don't ask for any additional financial requirements except for the first time that you sort of apply with us. So I think that's a nice competitive advantage for some of our small business owners.
thank you. So today, I invite the business. We hope that all the lenders, they want to help you. So please contact them. So the next question from me will be, when should borrowers contact you, talk to you? We hope the business, actually, you can make your lender be your partner, be your team member. So now I will go from Michael first. We go reverse, okay?
Yeah, I mean, it's a great question. I mean, candidly, at any point in time, for us, we're a relationship bank. We manage client relationships, lending and non-lending. So I think anytime you have an idea of something that you want to start, it's good to start early. So I would just encourage you through ourselves, through other, folks on the phone, just, be candid, be open, be transparent with what you want to do. and certainly you'll be able to find, you know, a good spot in a good organization that can help support you.
Thank you. Matthew?
Sure. And to Michael's point, I think that at any stage it's appropriate. Earlier the better. That way we can provide some guidance and make sure that what you're looking to accomplish, the bank is the right fit. I think it's appropriate that you always speak to multiple lenders to make sure that whatever program and the final outcome is best for you. It's never a great thing when you just choose one bank and you focus on them. I understand if you have a historical relationship and that's where you choose to go, but if you're kind of in the market for a new bank, I think it's appropriate to shop a little bit, make sure, because as you can see from the panel today, each bank does things a little bit differently. Ultimately, we all lend money. However, we do it within the scope of what we think is appropriate for our own bank, for our own balance sheet, and our own credit appetite. So definitely checking around with a few different lenders to make sure that it's the right fit.
Thank you. So I guarantee all the attendees today, okay, just send them an email, say you attend today's event. So they will talk to you, okay? Renee?
Sure. So I have to agree with my colleagues, what's been said so far. What I would add just specific to Bach is we can help you at any stage that you're in, whether you're in a rush or whether you have some time to work with in terms of that financing pursuit that you have. But one of the things that I would say is ideally, it would be great to be able to have that conversation with you early on. Why? One of the things that we specialize as an organization is being able to provide you with technical assistance. So many of the clients that come to us, they're younger stage businesses, their credit may not be in the best shape, they may not have their financials in order. We specialize in helping folks get those things ready. So I know that there might be lenders that want you to have a lot of that information ready. So they want to see those financial statements already looking pristine, or they want to see your credit in really good shape. You don't have to necessarily approach us if you don't have those things in order. We can help you get those things in order via the technical assistance that we provide. So again, it's to your advantage to talk to all of us as soon as possible, because you'll be able to tap into the appropriate resources and be able to gauge which lender is the appropriate one for you at this given stage. And it can always be something that you work your way towards being bankable. Because at the end of the day, I'll be honest, that is the goal, to become bankable, take advantage of the full suite of services that a major bank has. But us as an organization, we want to be part of that stepping stone that you may take if you're not ready for that bank financing just yet.
Okay, thank you. I saw a lot of questions pop up asking about, can they get a recording? Can they get a PowerPoint? Can they get all the lenders information? Yes, okay. Today we have the best host. Helena will send you the recording, okay, my presentation, so you know what's SBA's guarantee loan programs, and also all the lenders, their contact information, and each of their organizations program. So they list all their programs there. So here, please just listen carefully what their advice right now, and all the informations, actually, we will send that to you. So so don't worry, okay? Lily, next.
So I would suggest the business customer to reach out to us as soon as possible, as early as possible, because there's a lot of stuff we could prepare the business owner before they come and looking for finance options. Because most of the time for business customer, we might need 2-year projections, we might need business plans. For more of newly established businesses, we could refer them to get those ready before they present the whole package to the lenders, to our lending team. So as early as possible, don't wait.
Okay, Edmond?
Yeah, I just want to echo everything that's been said from my colleagues. As soon as possible, that's what I recommend. As you can see, we have a panel of people with different products out there. So it's good to have a conversation with each and every one of us, because we could have different programs to suit your business needs. I would say have the conversations, but keep in mind, I'm not sure which lenders do the hard inquiry, but Renaissance does. So every time a lender checks your credit, your score is going to ding a little bit. I would say 30 to 50 points. So have a conversation with them first and see if they fit the program.
Thank you, Howard.
Yes, and so I really want to echo the message mostly it was from Matthew, that you definitely want to reach out to all of the lenders. For just speaking from like First Republic, we primarily, like I was kind of mentioning before, looking at 3 years and out. Kind of if you're seeing that your business is at a point where I'm kind of moving to the next level. There's an opportunity for expansion, and I'm looking at kind of using and accessing the equity and the liquidity that I currently have. And let's say for ease of example, it's 100,000. Instead of tapping into all of that and putting yourself in a position where it may be able to be hard to get lending at a later point, look at bank options to be able to borrow those funds before you have to tap into the reserves that you have for the business. So that way you're not putting yourself in a weaker liquidity position. And so that's typically where I work with clients to really make sure that they're able to get access to capital at a lower rate, but be able to still maintain their liquidity within the business. And also to Edmund's point, I wanted to kind of echo that is, it is very true. You definitely want to reach out to lenders, but not immediately make a decision to go towards application, because it can have serious consequences with regards to credit. Typically at First Republic, I also am personally credit trained through Omega and through Kaplan, but I'm also have underwriting experience. And so typically what we'll do is gather the package up front instead of just kind of doing an application at first and pulling credit. We actually do an analysis to kind of see where the financial position is of the business and then advise. So I also do look forward to networking with all of the panelists that we have here further, because we can only be better work well as a team. I'm more than happy to always refer and work together to make sure that we do the right thing by the client and put them with the right solution that's going to work for them in their business.
Thank you, James.
Yep. So again, similar to what everyone said, earlier is always better. If that's nothing more than just identifying what your financial position is and what the reality of being able to fund the project that you're looking to fund is. More importantly than that, what you don't want to do is wait until the last minute to be able to access financing. Meaning, if you're doing something such as a commercial real estate purchase, do not wait until 30 days after you've signed the contract to start looking for financing. Just because this is a process and it does take time, no matter what product or organization that you're working with. So yes, just like everybody else, start early, but do not wait until the last minute.
Right. Okay. My advice is the best time to borrow money is when you have money. Okay. If you don't have money, nobody will lend you the money, because the lenders, they want to help you, but they have to comply with government's regulation. So if you cannot show you are, you are lendable, they cannot make loan to you. Okay. So the next question, we don't want to waste the lenders or business time. When you contact the lenders, when borrowers contact you, what kind of information they should have? Michael?
Yeah, no, another fantastic question and very key question. So I would say, certainly have your business and personal tax returns, ready. That's something you either can have yourself, or you can certainly supply through a CPA, certified CPA. So that's number one. Number two is especially for this time of year, it's good to have company prepared profit and loss statement and balance sheet, right? Generally, most of our business owners use QuickBooks. You can use QuickBooks. You can use other systems to help you with your finances, but having company prepared is important as well. And then lastly, depending on the sort of, loan sizes, here at Chase, it's good to have what's called a personal financial statement. Each lender might have it a little bit differently, but it's effectively a listing of your assets and your liabilities, generally on a 1 or 2 page form. So that's good to have as well. And then lastly, for those folks seeking larger lines, an accounts receivable report. So the receivables that are owed to you by your vendors or your clients, that could certainly help your case and be able to get you maximum amount of capital. So those are the key things that I would sort of share.
Thank you, Matthew.
Sure. I think similar to Michael, and I'm sure it will be the same for all of us. I just, an initial conversation is, knowing your business and knowing what you're looking to accomplish. And then from there, we can guide whether we're the right fit, and we can ask some, specific questions around revenue size. Last year, was there a profit? What do you need the money for? What are you looking to use it for? And then following that conversation, request some initial financial information like Michael had mentioned, and then we can have a much more productive conversation, because that enables each lender to determine the ability to repay debt, what the collateral position is, and some of the more specifics that we try and uncover in a first conversation. But being transparent with information, that'll save both sides a lot of time, and you'll end up in the right spot a lot faster.
Thank you, Renee.
Sure. So when it comes to the information, I'm gonna have to piggyback off of what Matthew just mentioned. I think it's important to have a conversation first, because the documentation that you may need or documentation that you will need may vary depending on the lender that you're speaking with. And it also depends on your specific situation. I think it's an important, I'll capitalize on this opportunity to mention something important that I've been seeing over the recent months, where I think it's important for clients or anybody who is going to be reaching out to lenders. And I'll speak on behalf of Bach Capital specifically in regards to the coming out of the COVID-19 situation. We know that a lot of businesses were shut down. There were a lot of effects. Many are still trying to recover. One of the things that we're seeing is that there seems to be a little bit of a confusion right now, at least to a lot of the customers that are reaching out to us, is they're thinking that our traditional lending products are the same as the PPP or the EIDL. So you have to keep in mind that with traditional lending products, we have to be able to prove your ability to be able to cash flow on that loan. So we have to be able to see that there is a historical cash, or not cash necessarily, but a historical record there of cash flow that can service a loan. And what we're seeing in a lot of cases is there are many businesses that are not able to meet their operating expenses. They're not, operating at the same level as they were prior to COVID. And I will be honest, a lot of the products that we have in terms of our microloans and et cetera are not disaster relief funds. So I want to make sure that you are all aware of this before you come and talk to us, where it is something where we could help you, maybe connecting you with the available grants or other loans that may still be available as a result of COVID-19. But a lot of the products that we have here, we have to be able to prove that you have strong cash flow to support that debt that you're looking to take, that loan that you're looking to take out. So I think it's very important, because I'm having a lot of difficult and I guess frustrating conversations with clients, because they're thinking that a lot of the loans that we're providing at Bach Capital are still geared towards disaster relief, but it's not necessarily the case. So that's why I think that conversation up front is important. Not only will we be able to identify if we're the right lender for you, we'll be able to also identify, do we have the right product that's going to fit your specific need right now? So I just thought it was a perfect opportunity to mention that as well.
Yeah, thank you.
You know what,
Renee.
Manley, I just want to piggyback. That is so important, because when we put on these webinars, I get a lot of feedback and a lot of questions on status of applications. I think that the chamber does. But to his point, people have been asking, why isn't it? And I said, it's two completely different, programs. The PPP is done, the stimulus is done. So thank you for sharing that.
Yeah, I just want to emphasize again, SBA, all the COVID-19 relief programs already ended. So that's why today I invite so many lenders. We go back, SBA continue to serve you, to help your business, but only have loans and guarantee loan. We work with the lenders, and also the lenders, they have their own programs. So please understand, it's the law makers, they make the rules. We don't know if there's more funding will come out, but so far there is no grants, only loans. Thank you. Lily?
So I'll say at the initial meetings, the borrower should be open and honest to the lenders, paint the pictures. What do you want to do? What are you looking to achieve? A lot of time I ask customer, how much do you need it? It's as much as possible. It's all right, but what do you need this money for? There's a different purpose, there's different loan for different purposes. Sometimes line of credit is better, sometimes loan is better. So unless you give us a full picture of what are you looking to achieve, we can really kind of advise you what is the best options for you.
Thank you, Edmund.
So in terms of documentation, Renee kind of hit it on the head. It really depends on the loan product. I wouldn't start necessarily gathering, the tax returns and bank statements. I mean, that's stuff we should have on hand already. But I wouldn't focus too much on the documentation. And to Lily's point, just knowing how much you need to borrow. It's not like as much as you can get. At Renaissance, we'll need to see some quotations. If it's for a build out, let's see the contract proposal. If it's for an equipment, let's see the espresso machine quotation. It really helps with the loan committee just to get a better understanding of your need. Because at the end of the day, you don't want to overborrow too. It's we're not a charity. We expect the money back as well. So don't take out too much if you don't need. At Renaissance, once you pay down 50% of the principal, you have the ability to borrow more.
Howard?
Yeah, really much to echo what everyone has said, specifically around documentation. Most banks are pretty much standard, kind of like to Michael's point of, some of the items he was listing out. And then to just really kind of echo Matthew, Renee, and Lee, that if I could echo what I would say is, I think all the guests here, when there's reaching out to any of the people here on the panel, is come with an open mind and a consultative approach. Really explain out what you're directly looking for. All of us, I know that typically working with banks, it can seem like it's a barrier that you're trying to get around to the access to the capital. It's actually the opposite. There is always going to be, as Manly said, regulations and policies that we all have to adhere for from the banks. We're an advocate for clients. And so we're here to make sure that we can bridge that gap to add that value to you and your business. So as much as open and transparent as you can be with your financial position, your goals, your aspirations, and how you want to get connected to those, that's going to help us really kind of be able to get you to the financing that you need. And I would say the other thing that I always find impactful in the very first conversation I have is please always disclose any experience you have with lenders. If you have something, if you do have EIDL existing right now, or you have another loan with another institution, not so much of it to be a secret, but it's to be able to help to make sure we have the total picture and we can help you as much as possible.
Thank you, James.
Sure. So I'm actually going to separate my answer into a startup and a existing business. So from the startup side, from a documentation standpoint, we would need the historical financials of the business owners. So meaning your historical tax returns plus a personal financial statement, as well as some sort of a either business plan or executive summary as to what the project costs are, what you plan on doing, and what the history of the business owners in the industry is. Now, more importantly than that are the projections. So just about anyone can put a set of numbers on an Excel sheet. What's more important than the numbers that you put there is the assumptions and the narrative that you put behind it. So picture it as somewhere between build it and they will come and a math exercise. So being able to articulately explain how you are going to achieve the numbers that you're going to achieve. Now, on the flip side of that, for an existing business, obviously there's historical financial performance. So it would be the last 3 fiscal years of financial statements, meaning tax returns, as well as an interim financial statement dated within 120 days of application. Now, lastly, and in addition to those 2 items, being transparent upfront is very important. Now, not just about an EIDL or a PPP loan, I'm talking about anything else that we should know about upfront. So I say this all the time. I've had borrowers that have had bankruptcies. I've had formerly incarcerated borrowers going through a divorce. It's not what you did. It's what you did to rectify it. So all telling us up front does is help us able to accurately paint the right picture for you. So I would say that those 3 things are really the most important ones.
Okay, my last question. I think a few lenders already mentioned. What is the most common mistakes that borrowers made? Michael?
Yeah, no, another fantastic question. So, I think a few of my colleagues mentioned, the importance of being transparent, throughout the process, particularly at the onset. There's no reason not to be, about the financial background of yourself as an individual, yourself as sort of a business owner. So, I think that's number 1. Number 2 is just really starting very early, building the infrastructure of your company. And by that, I mean, not just the lending piece, but doing all the things necessary, having a good CPA, having a good attorney pull the incorporation documents together. So sometimes people lose sight of some of the basics, but setting up the basics from the onset are really going to help the company be successful long term. So that's just one piece of sort of advice and something I've seen some people sort of miss in the past.
Thank you, Matthew.
Sure. I think for this question, it would be make sure you're borrowing responsibly. I think it becomes difficult for lenders when we review a company's financial position and their balance sheet has a lot of liability, which then makes it very difficult for a bank to refinance that or for them to show evidence of cash flow on the new need, right? So as you're progressing through, there's going to be needs that come up along the way. Managing your cash cycle is really important in making sure that your business can self-fund. And then as opportunities for expansion or growth come up, you would then leverage your lender. So that way your balance sheet remains lendable from a bank standpoint. You have room to grow and you don't discount your ability to lend down the road or borrow, I'm sorry, down the road by taking too much upfront.
Thank you, Renee.
Of course, I mean, Michael and Matthew hit it right on the head in terms of what a lot of our clients, may incur or what may happen when we take a look at their situation. Another thing that I'll mention, though, specifically here at Bach Capital, we tend to help a lot of smaller sized businesses. We're talking about folks that are even, requesting $1,000 loan, a $5,000 loan. We're talking about real, micro loans. So one of the things that I've seen, and I've even seen this in larger ranges as well for somebody who's maybe applying for 50, 75,000, you name it. Folks try to save a couple of dollars on paying taxes at the end of the year and don't realize that that's going to affect them when they go to take out financing. So I would say this, one of the main mistakes that I see is on tax returns, we see huge losses or somebody underreporting on their sales or a combination of those things. And what happens is the following. You may have a CPA or you may have an accountant that's currently giving you bad advice. It might be the case. Hey, let's save you some money on taxes. Let's report lower numbers. Let's not show that you earned that much money this year. But then when you come to us as a lender, we're going to look at that net income number. And if it's either in a negative place or if it's very little, it's going to show that you don't have any cash flow to support any additional debt. So again, in an effort to save you a few dollars in paying taxes to the government, you've now shortchanged yourself in terms of opportunities to get financing. So I would say, as one of the mistakes that I see quite often, I'll provide a piece of advice. Don't do that. Try your best to reflect as accurately as possible the information of your financial position on both your business and your personal tax returns, because at the end of the day, it's going to help you when it comes to that journey in finance.
Thank you, Lily.
So I'll echo most of the our colleagues here. Make sure when you do your tax return, you do it for the truth of your businesses. There's a lot of time that I have sitting down with a client and they said, well, how come you cannot do lendings for me? Because I have a net gross sales of $4 million. But when you're looking at the net income, it's loss of 100,000. There's no bank, no lender is willing to borrow you money while your business is not operating safe and sound. No one is going out for losing money. So when you have businesses that's operating at loss, we're not confident that you are having that, a good control on your running on your businesses. Therefore, we're not getting you the lendings. So talk to your CPAs, make sure your CPA know what your next step is. Because there's a lot of time I have a customer come up to me a year before they're ready to purchase a property, a year before they are growing their businesses. It says, I'm looking to borrow. What should I do on my tax return? Talk to your CPAs, make sure your tax return is looking nice and, lender friendly. Thank you.
Thank you, Edmund.
I would say one of the common mistakes I see is not separating the personal and the business expenses, because at Renaissance, we work with a lot of startup businesses. And I mentioned at the top of this meeting that we fund pre-revenue businesses. We need to verify your capital injection, your skin in the game. So if we're asking for the bank statements and then we see a lot of different charges, whether it's Uber expense or as a Netflix, we can't necessarily pinpoint if this was a business expense. I mean, it could have been, but what I recommend is to have a separate bank account open, talk to these guys, Lily, Dime, First Republic, reach out to these bankers, open up a checking account. It doesn't necessarily have to be a business account right away, because I understand there are some minimal transactions. Just keep the business and the personal separate if possible.
Howard?
Yes, absolutely. To echo that, and I kind of just saw I was going to address that. Thank you, Ralph, for putting that response in there. I know someone actually just kind of reached out and said, that maybe the tax return might not be a reflection directly of the strength of the business. And a lot of times that honestly does come up very often. And what ends up happening is, for most, at least banks, and I only maybe speak for myself, but of the banks that I've had a history of networking with before in the past, is a lot of them work off of EBITDA and really basic kind of accounting principles towards giving access to lending. If we did not use the tax returns, believe me, the documentation would be very extenuous. It would be more of a cash flow base. We would be looking at more of like cash flow statements, which would be, believe me, would take much longer than you think to actually truly analyze the true even flows of the business. And so when we look at the tax returns, that's the best gauge we can within guidance, because we all also have superseding governance from government as well as other departments that we all know. And so we have to stay within guidance of those. And so that's typically the best way for us to do it, is via the tax returns, because if it's not stated to that, that's what we're going by, is what you're telling the government. But going back to the original question, which was common mistake, is, equipping yourself with the right team to really go towards whatever your goals and aspirations are. And that was kind of what I think Renee and Michael were even touching on with the CPA. Make sure you have the right, whether it's CPA, attorney, different advisors. I consider myself a trusted advisor, as well as I do believe the panelists here do. Equip yourself with the right people who know what your vision is to be able to get you to there and in the right way.
Thank you, James.
Yep, so there's a couple of pieces to this. So first and foremost is knowing what you're using the funds for. So one of the things that I could certainly speak for myself, but I would go out on a limb and say it probably affects everyone on this panel, is when a borrower comes in and says, how much can I borrow? That is one of the more challenging questions to receive, or how much can I get? That's not a direct answer and is not a good way to start the relationship. So coming in, understanding what you need the funds for, being able to articulately speak about it and why it's important. Secondly, is understanding that this is a process. So this is not a fly-by-night, yes, I got you, don't worry, you'll have your money tomorrow. So understanding it just doesn't work that way, and having an open mind and being willing to work with us. And then lastly is not, like I said before, not waiting until the last minute to be able to procure financing. Get it when you don't need it. Even if you're thinking about an expansion or a potential need for financing, the earlier the better. And then finally, above all else, be transparent. We're all human beings and here to help you. So we want to be able to do the right thing by you. In order for us to do that, you need to help us help you.
Manly,
Okay.
if I could answer one more thing, and it just goes on to James, and I think it really is important for with all the panelists, is also understanding what your need is. I had one scenario in my past where I had a client who had multiple small rental storage units, and they just kept on doing that, and they would take out more lending basically to be able to afford that because it was essential to their business. When you can kind of step back, and I know it gets hard to in the day-to-day, the weeds, you can kind of get absorbed into all of the the mini fires that are kind of happening with the business. Instead of really taking a step back, for them, the essential need wasn't about getting more money to buy more little units. It was, I need to have a place to put all of my inventory. And so they ended up just buying a warehouse and saved a tremendous amount of money. So it wasn't about getting the next maybe loan to just get them to the next day or the next month. It was more making a really good step back, have a consultative team around you to really say, what is my true need? And I think that's what I think a lot of the panelists meant was, what is the true credit need? And then we'll make sure we can get you there.
Okay, thank you all the lenders, all the business here today. I think you have learned a lot. Talk to the lenders as early as possible and get ready. You have to prepare to be lendable. So I think that's our jobs as a business owner, to be lendable, not ask the lender just lend you the money because you need money. And you have to tell them why you need the money, how much you need the money. Okay, for help your business. So today I really want to thank all the lenders, especially the Greater Chamber of Commerce. Helena, your closing remarks.
Thank you so much. And you know what, the lenders do see the questions that you were asking in the chat. So, and I just want to let you know, it is being recorded. Everyone's going to get a copy of the presentation and the information about the lenders. So feel free to reach out to them. Thank you everyone for this very informative webinar. Access to capital is what is going to keep the economy going. And especially for entrepreneurs and small businesses, they don't have access to capital, and what you provided is very important. Even, you know what, you need to have your records in order to provide that. And I think they gave a lot of valuable tips that you don't have to hire people if you don't have a budget. You could do it within yourself. And also you do need expertise, but that's what this panel is here for. I just want to do a shout out. Mark Jaffe, our president and CEO, is on here. Also, Brenda Stewart from the IRS was listening to this conversation. The IRS is part of this. So shout out to Brenda for, participating in it. Again, it's important for the local city, state agencies to hear the concerns of the businesses. So we appreciate that. And shout out to Darnell Phillips from First Republic. He was on there, community partner with us. Gideon Dunkley, Belal Hassan, Cheng Li, who just became a member this morning. Welcome. And I just wanted to say, next Friday, we have another complimentary webinar, MBWE certification. It's like a piggyback to, there's a lot of information going out there. We're trying to get that into the hands of the small businesses to have access to grow your business. So MBWE next week at 10 o'clock, and also September 23rd, annual business expo. We're putting it on Greater New York Chamber of Commerce. We're back for our 21st anniversary. It will be at the Hilton Midtown. Now, what's going to happen there? It is free to walk around. A lot of people on the panel will have representatives from their organizations to provide information like this to everyone for a full day, 9 to 3. So RSVP at chamber.nyc. If you're interested in taking a table, let me know. Any of you guys who are on here right now want to, do what you're doing, meet the lender type of thing, let me know, reach out to me. And we so greatly appreciate the community partnerships that we have with First Republic, with Chase, and with City National. So thank you again so much. And Dime Community Bank, Renaissance, BOC Capital, we so appreciate everything that you guys do. Pursuit, and especially Man Lee Lin for the greater, on behalf of the Greater New York Chamber of Commerce, we so appreciate everyone being on here. So thank you, James. Thank you, Howard. Thank you, Edmund. Thank you, Lee. Thank you, Renee, Matthew, Michael, Ralph. Have a great day, everyone.
Enjoy your weekend, guys.
Thank you.
Thank
Thank you.
you.
Thank
you.
Bye-bye.
you. Have a nice weekend.